What's going on, guys? In this training video, we are going to talk about how to set up a take profit and a stop loss. A very, very important video, so definitely make sure you take thorough notes. Go ahead and jump on tradingview.com. We are on USDJPY. You can go ahead and mark this up with me. That way you know exactly how you can identify where you enter the market, where you place a stop loss, and then also if you want to place a couple take profits, maybe you only have one, maybe you have two, maybe you even have three, you'll know how to identify where those zones are at and where you would enter the market. So we're going to get right into it. Now, keep in mind, you guys, this is one of the big things that I believe new traders struggle with is number one, finding an entry, right? When do I enter the market? I mean, that's a big thing is when do I actually get in on a buy or a sell? And then number two, where am I going to exit? Okay, where am I going to exit if the market doesn't go my way, which is your stop loss? Or where am I going to exit if it does go my way and I need to get out before it reverses and turns on me, right? So I want you to take a look very, very closely at how we mark this up and how we identify these different zones. Now, we haven't really gotten into the Fibonacci retracement tool yet, okay? And that's going to be really a key tool that we are going to use to identify entries and exits. So I'm going to go ahead and introduce that tool to you on this training video. So again, we're going to cover quite a bit here. So definitely make sure you pay close attention. I also highly recommend going back through this video. That way you can see exactly how you place your entries, when you get out in terms of take profit, and then where do you place your stop loss, okay? And we're all going to base this off of our key confirmations and our Fibonacci retracement tool. Now, as you already know, basically from what we've covered in training, we've covered a few key confirmations. So let's go ahead and talk about those. Remember, it's all about our confirmations. Now with our strategy, with the Masterminds trading strategy, we basically have 5 key confirmations, but 4 that we're heavily relying on. Number 1 is market structure. Remember, we had the order in the previous video where we talked about this. Number 2 is price action. Number 3 is RSI or divergence. Number 4 is our Fibonacci levels. And we'll also talk about the PRZ or golden ratio, very, very important. And then number 5 can be Bollinger Bands or moving averages, okay? And we haven't really covered moving averages a whole lot. I'm going to show you moving averages in a later training video. However, in terms of the way I trade long-term, I don't really use moving averages that much, I'll be honest with you. But in terms of scalping, we'll use moving averages a little bit more to identify crosses and when price is potentially going to go up or when price could potentially go down. Okay, so again, market structure, price action, RSI divergence, Fibonacci levels, PRZ or the golden ratio. I put ration here. We're talking about a golden ratio, not ration. And number 5, Bollinger Bands or moving averages. Okay, so let's take a look at this chart. We're on USDJPY. So go ahead and open that up on your trading view. And we're going to take a look at a couple different things. Now, number 1, we need to mark up our chart, right? We need to find support and resistance. It's always the first thing that we're going to go ahead and do. Now, remember, we trade from the top down, which means that we're going to want to go ahead and go to the daily first to mark up our key levels, our resistance and our support on the daily. Now, this is a really, really nice range here. I personally love JPY pairs because of the market structure and the way they move. I mean, it's so precise. Just take a look at this and let me show you something here. So let's take a look. I'm going to go ahead and move our text down here just for a moment. Now, if we take a look at this chart, we're looking for the top and the bottom, right? Now, I want to look in the most recent zone. So this is pretty recent, okay? Now, really, we're going back to 2015, but on the daily chart, you know, that's when you zoom out a little bit, you can kind of see a bigger picture here. I want to get a better idea of where our zones are at. So I can see that right above this price zone would be a ceiling or a resistance, right? So we're going to go ahead and grab our rectangle, and we're going to go ahead and draw that in. And I usually like to go right down to where price is touching, and I might go a little bit deeper into the zone, just a little bit. That way we can see how far the zone goes. And then I may even pull this up. We went a little far and the chart doesn't like it. So let me scroll over. Here we go. Yep, and we're just going to pull it up into the zone. See, and let me show you why I'm doing that. I'm going to go ahead and color it red. The reason why I'm doing that is you can see price is going into the zone up here, which I want to mark that up with my rectangle. I definitely want to identify that area. But price is also going into the zone up here and in here, right? So I want to get from the bottom to the top of the resistance zone. Remember, because it is a zone. It's a zone where price is going to go into and then bounce off. Because again, most times it's not precise. It's not precise, and it's going to go into the zone a little bit before it reacts and makes its move. Now, this is a confirmed resistance. This is this is a very strong zone because I can see that it reacted, and it's been reacting for the past, well, since December, 2014. So it's been reacting for a while within this zone. Now you can see over here that it actually acted as a support, right? But then once price took a dive down below, it's hovered below ever since, okay? So now it's a resistance. So where we're at with price today, we're looking at a resistance, okay? So that is a very key level, and we're going to definitely want to make sure that we identify the whole zone. Now what we want to do is go ahead and take a look at our support. Now, again, keep in mind, there will be a few different zones that you're going to trade between. So what I like to do is draw the overall support and resistance, and then I like to draw our range. Okay, the range we'll be trading in. We'll talk about that in a minute. So let's go ahead and draw support, which, as you guys already know, it's the bottom of the chart. Where's the bottom of the chart at? Down here. Look. Pretty simple, right? There's some support down there. I see price going down into this zone. I see some wicking action. And I realize that price does not like to be that low, okay? So I'm going to go ahead and draw my green zone there. However, like we just talked about, I need to identify our range, okay? So I can see that there's also some support in here. Now let's take a look at this for a moment. Can you see how we're finding some support here as well? Can you see that? There's also some support in this zone as well. Remember, we're looking for multiple touches in price action. Now you can see that once it went up here, you can see this peak stopped at the resistance, right? You can also see that price made a different movement here. It actually pulled back at the zone and then broke through, okay? So this is a base. We can also call this a base, okay? I look for different bases when I'm marking up support and resistance, and I give you guys a great resource. There is a channel that I watch. He's a crypto trader. I'm going to give you guys that resource because I think he breaks things down really, really easily for you to understand. It's so simple to understand really how support and resistance works. And when you do, your trading is going to be elevated to the next level. There are a lot of different programs and people that talk about support and resistance. However, if you can actually master identifying these zones and really understand how they work and how they affect price action, you're going to be in such a bigger advantage than you were before without knowing the information. So again, this is my secondary zone. Now, which support is more relevant to where we're trading today? So again, this is where price is today. We grab the brush. This is where price is today. So which support level is more relevant, 1 or 2? So here's support level 1 And here is support level number 2. Which is going to be the most relevant for where we're trading today? Support level number 1, right? Definitely going to be support level number 1 because we can see that price has previously gone back and forth in this range. It bounced up and down, up and down, up and down, up and down into this range. Now you can see here that it went way up into the range and then crashed and then bounced back and forth and then went way down and then started to rally to the top side, okay? So we're going to talk a little bit about that, but I want you guys to identify a few key things here, okay? So again, market structure is the first thing that we've marked up, and it's beautiful. We have our support and our resistance. Now what we're going to go ahead and do is we're going to zoom in, and we are going to find our trend. Now, currently, if we look to most recent price action, we're actually in an uptrend. Now, there is actually some sideways movement. If you really look at it, we're kind of moving sideways right now. Can you guys see that? How price is just bouncing in between in this range and kind of going sideways. We don't really have a very well-established trend. However, we are in an uptrend. Now, I'm marking up this uptrend. You can see how 2 or more points meet on the top or the bottom. So this is a nice, clearly defined uptrend. I'll go ahead and zoom in on that for you so you guys can see how that works. Now, again, I'm basically going to the end of the wicks, but I also want to be in the zone. So just use your best judgment when you're drawing your trend lines. But I can see how right here I have 1 touch, 2, 3, 4, 5. This is a well-established uptrend, and I can see that it's reacting nicely to the trend lines. Okay, so this is the second step of market structure, is drawing those trend lines, identifying trends. So again, we identified support and resistance. Now we've identified where our trend is. Okay, we have our trend lines. Go ahead and look over this for a moment. I want you to see exactly how I did that. Hopefully it's all making sense for you. All right, beautiful. Now, what is step number 3? What is step number 3? Let's go ahead and pull our text box. Oops, not that one. We want this box. Back up. So we covered market structure, right? Now, step number 2 is price action. We just identified that we're in an uptrend, right? So price action right now has a tendency to be moving up for the US dollar against the Japanese yen, which means that our base currency, the US dollar, is going up or appreciating in value against the Japanese yen, right? So price action right now is moving in a positive direction or an uptrend. Now, the third step, RSI and divergence. Okay, so we want to take a look at where are our levels on our indicator, and do we see any divergence or a shift in momentum between the actual price on the chart and the indicator itself down below. Remember, we just talked about divergence and how they do 2 different things. Okay, while price may be going up, the indicator is actually showing a downtrend or a shift in momentum. Okay, so let's take a look at exactly how that works. So if we take a look at the RSI, the first thing I need to identify is it in an extreme zone? Now, based on what we're looking at today, we would be looking at a sell, right? We would be looking at a sell because we're nearing resistance in the top trend line. Okay, so we would be looking to sell USD JPY. Keep in mind, sometimes you'll have to be patient and wait for the setup. And on this trade, you will be. You wouldn't be able to trade this right away. Now, tell me why. Why would you not want to trade this pair right away? Because if you take a look, we're actually in the middle of the trend. Okay, we're in the middle of the trend. You never want to trade in the middle of the trend. See, right here is the middle of the trend. We want to trade down below by the trend line or up top. And even better is if we're in a support zone or a resistance zone, right? If we can get both of those confirmations, that's beautiful, right? Right here we have a touch at the bottom trend line, and we also have a touch into support. To me, That is a huge buy signal. That's a huge buy signal, right? That's telling me, okay, we're in support, which tells me price is likely to go up, and we're touching a bottom trend line, which also indicates price is likely to go up. Now, we need to take a look at RSI and to see if there's any divergence, or if at least RSI is in an extreme zone to confirm or give us confluence with our trade idea. So confluence is when your confirmations are all working together simultaneously. Confluence is where the market is working in synchronicity or in harmony with your analysis, okay? So you have market structure going your way. You have price action going your way. The RSI is identifying that it's time to sell, right? So all of these things are very, very important when you're marking up your chart. Now, let's take a closer look. I'm going to go ahead and attempt to undo some of this. All right, so let's go ahead and take a look at RSI. Now you can see, and again, another reason why we would not take the trade, the RSI is in the middle of the range. It's sitting at about 50, 55. Okay, technically speaking, you could buy into the trend. You could buy into the trend. However, you wouldn't want to do that. Why? Why? Well, because we've reached a resistance zone, and look what happened previously. Price didn't even make it to the top of the trend line. Well, right here it did. But this last time, it didn't even make it to the top and then came down. That's telling me that a shift of momentum is likely, that we're likely looking at a shift in momentum, right? That things are probably going to change pretty soon. And it looks like we're probably going to be looking at a downtrend, right? And if we go ahead and look at just exactly what's going on here, what's going on with price action in the RSI? Well, if I take a look at this, we have a lower high. We have a lower high. Remember, an uptrend is higher highs and higher lows, right? Higher high, higher high, higher high, and then we have our higher low, another higher low, and then a higher low, right? And even another one, a higher low. However, this most recent move was a lower high. So that tells me this could be the start of a downtrend. Okay, we could actually be looking at the beginning of a reversal. The beginning of a reversal, right? And that's actually what we're going to be looking to trade is a sell. Okay, so with that being said, what we need to do is we need to wait for price action to enter deeper into the resistance zone. So in order for us to see right now, I wouldn't even be looking at this. I would mark this chart up and say, hey, look, it might be a good sell here in the future. We might want to set a sell stop or a sell limit, which we're going to cover in the next video, pending orders. But for right now, I don't want to get into the market because it's in between the range. It's in the middle of the range on the RSI, and it's in the middle of the range on the trend line. So what we want to do is wait for the RSI to be in more of the extreme range again. Now, if you really take a good look at this, where would the ideal sell point be? Where would your ideal sell have been on this trend? There's only really one clear answer. The best possible sell you could have taken was right here. Right here, without a doubt, right here. Because we have price going deep into the resistance zone. We have price touching the top trend line. And we also have a large red candle indicating a sell for price action. So again, price action confirmed it after the first high volume red candle, which told us it's time to start selling. And if we look at the RSI, take a look at what happened. We were in the extreme zone on the daily. We were actually looking at about 74, 75, which is above overbought. right? It's above the overbought zone. So we want to go ahead and look for a sell. Now, also, you can see a shift in momentum. Now, there isn't a whole lot of divergence happening here, but I would say some pretty standard divergence occurred here. If we take a look, this trend you can see here, if we just go from point A to point B here, and then we go ahead and look at the RSI from point A to point B, you can see some slight divergence, okay? You can see that momentum is starting to shift to the downside. And then what happened was on the next level or the next peak, we saw that move, right? We saw the move completed, which we already drew here with our line here, right? So the move played out. Momentum started to shift over here, and then it started to go down over here. All right, so why would we enter right here? Well, what we're going to go ahead and do at this time is I'm going to go ahead and show you the Fibonacci retracement tool and explain to you how powerful this tool really is. Okay, this is a very, very powerful tool. So I want to go ahead and show you exactly how this thing works. So I'm going to go ahead and undo all this stuff here, but I want to keep our key levels. Okay, that's good enough. Now let's go and grab our tool. So again, all you have to do is follow along with me. And you're just going to go ahead and go over to this pitchfork symbol here. Click on the arrow. You're going to go down to the fib retracement. And again, in this drop down, the fib retracement for now is pretty much all you're going to use. So go ahead and click on that. Now what you're going to do is on a buy, you're going to go ahead and draw from bottom to top. Okay, from bottom to top because you're going up in price. On a sell, you're going to go ahead and draw it from top to bottom. Okay, so what I want to do here is draw this from top to bottom because we're looking for a sell. Okay, so what I'll do is I'll grab this top peak, the very highest point of this trend, and I'll mark the top of my fib. And then I'm going to go ahead and scroll down to the bottom peak. Okay, to the bottom peak. Now, if you want to, you can even grab a horizontal line just to make sure it's very, very accurate and go ahead down to this bottom peak and just hit your horizontal line right there. Boom. There's my horizontal line. It's matching up with the 0 very nicely. Now, let's go ahead and take a look at the Fibonacci retracement and how it works. Okay, so as you can see, we have a level that's 0%. Now, my Fibonacci is actually adjusted, okay? So I actually adjusted two of the levels. One is at 25% and the other is at 75%. So keep in mind, they're going to be a little bit different when you open up yours. Yours might look like, I think it's 28 and 72 or 73 or something. So they're going to be very, very close in percentage. Mine are just a little bit different because the way that I like to calculate my moves. So if you want to duplicate what I've done, you can go ahead and change the second and the third, fourth, sixth level to 25 and 75. We can go ahead and talk about that in a minute. But for now, go ahead and just use what's already there. Because ultimately, what we want to talk about is actually the golden ratio of 61.8. I'm going to go ahead and actually pull this over here so you guys can really see these levels and see the numbers. So again, we have 0, we have 25, we have 37.5, 50, 61.8, 75, and 100. Now, the 61.8 and the 50%, which we're looking at right here. Now, you guys, this is going to be a brief overview of how fibs work. If you want to get some more information, again, in the resources tab, I will have a channel that you guys can follow. And they actually go over all of the details of the Fibonacci, the background, the history, and all that good stuff. That way you can get a really in-depth look at how Fibonacci was created and how it can benefit you as a trader. But what we're going to talk about here is just basically how you use it for marking up charts and how it can apply to you right away. Okay, so we look at the 51.8 and the 50%. Okay, now the 61.8 is known as our golden ratio. Okay, so Fibonacci realized that the 61.8 is a level where things tend to change, where price in the market tends to want to reverse or hover in that area, okay? So where price tends to want to reverse or hover in that area, okay? So it's the golden ratio where price is going to hit, and then chances are it will bounce off. So remember, chances are when price hits that 61.8, it may go a little bit below, but if it respects it, it's going to want to go up or reverse. Okay, in this case, it bounced off. So let's take a look at a couple examples of price bouncing off the 61.8. So if we look at our 61.8, we grab the brush here, you can see that price respected it here. Price respected it here and went down, right? Price respected it here again and pulled back a little bit. Price respected it here and went up. Price went down here. It went down pretty low. We're going to talk about this zone right here between the 50 and the 61.8. But really, price hovered in between this zone and really respected that 61.8 line, didn't it? Price really respected that area. Now, you're also going to notice that price consolidated and hovered in this zone, which is ultimately what I want to talk to you about. Between the 50% and the 61.8 is known as our PRZ, or price reversal zone. Let's go ahead and take some notes here. Fibonacci retracement tool. Number one, on a buy, draw from bottom candle wick to top of the trend, really to the top of the wick. On a sell, draw from top to bottom, again, because we're expecting price to go down, and then vice versa of what we said above. So you're going to draw it from the top wick to the bottom of the range, or the low wick. So we're looking at the most recent trend, right, which is what we marked up. That's why we do market structure first, and we draw it from top to bottom or from bottom to top. Now, as we identified, number three, the 61.8 is known as the golden ratio. Now, there's a lot of math behind this, you guys. That's why I said go ahead and look at the resources tab and go to the channel that we talk about that has a full overview on fibs, because it's important to understand how this works mathematically and how Fibonacci, came up with this tool and why it continues to work and stand the test of time. Okay, so 61.8 is known as the golden ratio. I'm not a math whiz, you guys. I think I'm pretty good at math, but I'm not a mathematician. So I would rather have someone else that has good math expertise break this down for you and explain how Fibonacci did it. I won't sit here and teach you anything that I don't do or I don't know thoroughly. So in that case, if you want to learn more about the history or the overview, go ahead and look that up under the resources tab. And number four, we're going to talk about the PRZ, or price reversal zone, which is the 50% to the 61.8%. You guys, I'm going to tell you something right now. The 50 to the 61.8 is so important that if you can identify when price gets into that zone and it's meeting a trend line and a key level, you're in a good trade. So let me explain what that looks like. Oh, if I backspace, it's going to get rid of my text. Make sure you guys go ahead and write that down in your notes, because I'm about to get rid of it. Okay. So let's go ahead and take a look at where price is meeting the 51 or the 50% and the 61.8, which is known as our price reversal zone. So again, in between these two levels is called the PRZ. So if you ever hear me say, hey, price has entered the PRZ, we're going to go ahead and place a buy, or we're going to go ahead and place a sell. Now, on an uptrend, we're going to wait for price to be in the PRZ and hit a trend line. So in this example here, I'm going to redraw the trend line because I do have some drawing stuff going on here, and I want you guys to be able to clearly see it. So let me just redraw the trend line. Here's our bottom trend line. Thicken it up a little bit for you. Now, you can see that right here, price actually hit the 50, between the 50 and the 61.8, right? You can see that, right? And it also hit the trend line. Okay, it also hit the trend line, which is an indication to me that price is going to actually reverse in that zone. So what was the previous trend? What was happening previously? Well, if you take a look, we were actually experiencing a pullback, right? You can see all the red candles here. Price was actually pulling back. So if you wanted to enter, you could get in right here at the bottom. Let's say if you missed the buy signal down here, if you wanted to enter on a buy, you could get in right here where price is in between the 50 and the 61.8. Now keep in mind, the 50% level will always be the same whether you draw from top to bottom or bottom to top, okay? Because it's halfway. It'll never change. No matter how you draw this fib retracement, the 50% will always be in the same spot, okay? So even if we're looking for a sell, the 50 and the 61.8, the 61.8 and the 37.5 will be flipped, but the 50% will be in the same place. So let's go ahead and actually flip them and draw another fib just so you can see what I'm talking about. So now I'm going to draw it from bottom to top, and we'll compare the two. So you can see how the 50 meets up with the 50, but the 61.8 drawing from bottom to top is meeting up with the 37.5. The 0 is still the same. Well, the 0 actually meets up with the 100 rather, right? And the 0 up here will meet up with the 100. So really, you guys, the big difference is going to be the 25%, the 75%, the 37, and the 61.8, the levels in the middle. So the 2 on the top between the 50 and the 100, and the 2 on the bottom between the 50 and the 0. Those will be flipped, okay? But either way, you're going to notice how price respects the zone. So don't get too confused with the numbers. The most important thing you know is the 50 and the 61.8, just knowing how the PRZ works, okay? But also understanding that when price touches a key level, chances are it's going to continue on the trend. So right here you can see price hit the 37.5. What did it do? It went up to the 61.8 and it pulled back. Then it hit the 50. Then what did it do? Went up to the 61.8 and it pulled back down to the 50. Right now we're in the PRZ. Then what did it do? It went back up to the 61.8, retested, and went down a little bit, only to continue to the upside all the way up almost to 100 in the basically the middle of the 75 and the 100 to pull back. It went down, hit the 61.8. You guys see how this is lining up. Pay attention to the numbers. It went up to the 75, respected that, pulled back all the way down to the 50 in the PRZ where we would have placed our buy, continued to the upside, pulled back at the 75, and then ripped all the way up to the 100, and then pulled back down and respected the 75%, not once, but even twice, to continue back up to 100. Now, where we're at, it bounced off the 75 again. Now, look, it's actually going back up toward the 100 again. okay? So technically speaking, because it's at the 100 level and it's in the resistance zone, you could place a sell there. Now, the only issue I have with that is it's technically in the middle of our trend. If we zoom out, that would actually technically be in the middle of our trend in between two trend lines. So I really wouldn't like that. Ideally, you would have taken the trade back here at this peak because the trend line met up with the resistance and the 100 level. Okay, so that would have been the ideal area to place a sell. Okay, so again, right now with where the market's at, I'm not really looking to trade that, but if it goes deep into the zone, hits the 100 or goes beyond that and hits the trend line, anywhere from the 100 to the trend line, deep into the resistance, I'm going to go ahead and place a sell. Okay, I'm going to go ahead and place a sell there. But for right now, the only logical trade that you could take based on what price action is telling you and market structure is a buy. Okay, and you don't want to trade against the trend. And right now, we just saw a lower high, right? We just talked about this. We had a higher high here, led to a lower high. So technically, we're probably going to be looking at a sell or a downtrend or a reversal. So we don't want to place a buy here because we would be trading against the trend. And really, you wouldn't want to place the buy there anyway because we're in the middle of the trend. Where do you want to place the buy? Down here at the key level at the bottom trend line. To put it simply, you guys, you buy at the bottom trend line, you sell at the top trend line. Then you match up your confirmations. Is price action moving in your favor? Are we at a support or resistance? Is there divergence, or are we in an extreme zone on the RSI? Remember, these are all questions you're going to ask yourself before you take the trade. You want at least 3 confirmations before you act on the trade. So again, market structure. Are we hitting a top or bottom trend line? Number 2, is price action moving in our favor? Number 3, is the RSI in an extreme zone, or is there divergence, bullish or bearish? Number 4, and actually let's go over there so you guys can see what I'm talking about here. Number 4, are the Fibonacci levels, PRZ, or the golden ratio matching up? Okay. Are you looking at these key levels and determining where your trade could end up? Now, I like to look at historically what happened, which is what we just did. So what we just did was we looked at what happened historically, but we can also determine when we get out of the trade by looking at the Fibonacci retracement tool. Okay. So if we placed the ideal sell, which on this chart would have been right here, right? We had all those confirmations. We would look to exit where? Where would you want to exit this trade? Remember, you're going to buy the bottom trend line and sell the top trend line. So if we're selling the top trend line, where do we want to get out? Where do we want to exit the market? Boom, right here, right? Right here at the bottom trend line. And look at that. We're also at the 75% level on the Fibonacci retracement. So what I realize is this. Whenever price gets near a level, a key level on the Fibonacci retracement, chances are it's going to either consolidate there or it's going to reverse or continue the trend, okay? So ultimately, you definitely want to get out of this sell because it's likely the trend is going to continue to the upside. Now, we just talked about trading with the trend, right? So you want to make sure that price action is moving in your favor and price is going down a little bit before you place the sell. You need to see a shift in momentum occur in price action before you place your sell. All right, so I hope that makes sense to you guys. Again, you're going to definitely want to rewatch this. And I'm sure this is something that we're going to cover over and over and over again in mentorship calls. This is a lot of information. If this is not making sense to you right now, don't worry about it. When I first came in, I didn't understand fibs, nor does pretty much anybody that comes in. The Fibonacci extension It seems complicated at first, but once you learn how all the levels work and how price reacts to the levels, you'll be that much better using it. So from here on out, what I want you to really think about is just mark up your Fibonacci, okay? Draw it from top to bottom or bottom to top, depending on a buy or a sell. And just notice how price reacts to the different levels, okay? Just notice how price reacts to it. Pay attention to what levels it's bouncing off of. What levels is it consolidating in between the 50 and the 61.8, also known as the PRZ or the price reversal zone. Now, you could consider the 75% of price reversal zone here on this chart as well, because it did react, it touched it, and then it went back up, right? So any level really where price is going to reverse is a PRZ, but the main price reversal zone is always going to be between the 50 and the 61.8, okay? So I'm trying to think here if there's anything else I really need to cover in terms of this. I think that pretty much sums it up for this, okay? Now, I was going to do stop losses and take profits on this video. I just covered your entry and your exit. Now we need to talk about stop loss, okay? Stop loss. So let's go ahead and actually do that. I'm going to go ahead and get rid of a lot of this so you guys can see better. I can quickly make a mess out of a chart, that's for sure. Now, your chart should look nowhere near as messy as this. I'm just, because this is a training video, I do use the brush a lot, but your chart should look very, very clean and easy to understand. It shouldn't be complicated by any means. All right, I think that's as far as it wants to get rid of. So that's all I got for you guys. Sorry about that. But let's talk about stop loss. So if we're on the daily chart, we need to give our trade room to breathe. So if I really take a look at where we're at here with this thing and I zoom out, I want to take a look at my entry, which was right here at the 100 level, right? Right here was my entry. So I'll go ahead and draw an arrow. And I'll draw it in red because it was a sell. Right there was my entry. And right here was my exit, right? Right at the 75 or where it touched the bottom trend line. So your exit or your take profit. Now, we need to look at where our stop loss would be. Okay, now if you take a look, if you placed a sell here, what you're going to want to do is if you notice that price bounces in between the trend lines, you're going to want to go ahead and place your stop loss above the trend line. So what I generally like to do is on the daily, I'm using about a 30 to 40 pip stop loss, sometimes even a 50 pip stop loss. So if I go ahead and use my handy dandy ruler here and I grab that top entry right there where we entered the market and draw it up 50 pips up, see, we're pretty far up into there. I want to go ahead and zoom in so we can really see what's going on here. I want to put my stop loss. Now, look, if you caught that whole move, you would have made about 300 pips, right? So we need to do 3 to 1, okay? 3 to 1. So technically speaking, you could have a 100 pip stop loss. However, I would never do that. I don't think there's really any reason to do that. I think a 50 pip stop loss would be more than realistic. So we're going to go ahead and place a 50 pip stop loss, which would be right here. So 48 up to right about there. Okay, so it's going to be just above the trend line is where we're going to go ahead and place our stop loss. Now, the reason why we do that is, as you can see, price sometimes will break above a little bit, but wick down. So we don't want to get caught getting stopped out when price is still going to move our way. It just wicked up and went above a little bit. Sometimes the market gets overbought or oversold, and it does go below or above the trend line a little bit, but you need to give your trade room to breathe. So what I'm going to do is I'm going to go ahead and place my stop loss right here because I want to give the trade room to breathe. So how did we find the stop loss? Again, we found the stop loss because we looked at the trend line. We realized that price doesn't like to go above the trend line. So we placed our stop loss about 10 pips above the trend line. That way, if it does push into the trend line a little bit, it's still going to give us an opportunity to stay in the trade and catch the whole move. And you guys, 50 pip stop loss to a 300 pip take profit is a very, very good risk to reward ratio. Now you're going to learn how to use this tool, which is called, we're going to use the short position to go ahead and measure our risk to reward ratio. Now, I'm going to go ahead, this middle bar goes to your entry. So this middle goes to your entry. And this top one, where did it go? Disappeared on me. Oh, the chart's acting funky. We're going to pull this down to our stop loss. And see, this is a little difficult because it's coming out pretty big. So in this case, what I'd like to do is zoom in a little bit. So we said it was about 115, right? So right about here. And then our entry is at 114,568. So we'll go ahead and move this to 114. $568. Right about there is good. And then we'll move this down, back down to our stop loss. And then our take profit, we're going to adjust to the bottom right here where we get out, right? That's where we said our exit was, which is 111,817. So we're looking at, perfect, a risk to reward of 3.61. Now, I just showed you how to use that tool. You're probably thinking, oh boy, another thing I don't even know how to use. Don't worry about it, but you're going to want to know how to use that because it's really nice and it shows you your risk to reward. So the top level is where your stop loss is. So I could make it really easy and just grab a horizontal line and place it where I would put my stop loss. So I'll grab a horizontal line where my stop loss is, where I covered with an ellipse. And then my entry, I'll grab another. Now I know this is real messy, you guys, so let's actually go ahead and clean this up because we are getting near the end of the training video. So again, we'll just mark up our market structure real quick so you guys aren't confused. The trend, boom, boom, and then boom, boom. And then remember, we placed our sell here, Okay, we placed our sell here at the top trend line of that move, right? And we placed our stop loss right above that. So I'll grab a horizontal line to signify my stop loss, which will be right above the trend line right about here. Then we can drag it down a little bit, probably about right there. And I'm going to make that a little less thick. And then I'm going to go ahead and grab another one for our entry. Right there, perfect. And then I'm going to grab another one for our exit, which is right there, perfect. So again, our exit is at the bottom of the trend line, our entry is at the top for the sell, and our stop loss is just above it, about 50 pips, okay? So again, I'm going to go ahead and grab this short position. Now, the reason why I'm using the short position is because it's a sell. We're shorting the market. If I was placing a buy, I would use the long position because it's a buy. And again, all this is doing is showing you your risk to reward, which is very, very important. So I'm going to go ahead and just click to place it. And then I'm going to match up my entry, which remember, your entry is the middle two dots here. Line it up with 114666. Boom, right there. And then I'm going to grab the stop and pull it down to the top trend line, which is at 115384. Boom, right there. And then I'm going to bring the target to this bottom line, which is our exit, which is at 111. Well, it looks like 111,803. Perfect, right there. So you can see that we have a risk to reward ratio of 3.99, which is basically a 1-to-4 risk to reward ratio, which is pretty good. Remember, you don't want it to be too extreme and be a 1-to-5 or anything like that, or 5-to-1, because you want to give your trade room to breathe. However, in my opinion, sometimes it's okay to do a 5-to-1, or you can do a 4-to-1 like we have here. Okay, so between a 3-to-1 and a 4-to-1 is in the perfect range. You're giving your trade enough room to breathe, and you have a good risk to reward. So that means I'm only risking 1 to gain 4, which is pretty good, right? You're risking 1 to gain 4. Okay, that's pretty good. That's pretty good. So I'm only risking 50 pips really to gain 300. I'm pretty happy about that. Okay, I'm willing to risk 50 pips to make 300. Okay, so I hope that makes sense, you guys. That is how you identify your entry, your exit or your take profit, and your stop loss. We also went over how to use the Fibonacci retracement. I'll say it again. Definitely go back through and re-watch this video. You may have a lot of questions. Pay close attention to when price hits these key levels. Remember, trading is all about levels. It's all about when price hits a level, how it reacts to that level. Your job is to place your entries, your exits, and your stop losses at those key levels. So you want to place your buy at a support, a bottom trend line where the RSI is oversold and you see bullish divergence. Makes sense? You want to place a sell at a resistance at the top of a trend line where RSI is in the extreme overbought zone. Okay? That's how you line up your confirmations to find confluence in the market with your analysis. Okay? That's how everything works in harmony. That's how all of your confirmations are working together to help you trade. And you guys, if you can master these confirmations and master this process, you are going to have a huge advantage trading, and you will be consistently profitable day in and day out. So again, Make sure you write down all your questions for your mentorship call. That's going to be everything for this training video. I will see you guys on the next one.